Welcome to Coleman Report Live. I'm Bob Coleman, and we're talking Main Street. Small business lenders who help it grow. One of those small business lenders is Chris Hearn out of Orlando.
Hey, Bob.
Is our other small business Coleman webinar guru. Hey, let's get right to this, Chris. What have you been working on the last couple hours?
Going through the 5,593 page bill. That's the longest bill ever, which we shouldn't expect anything less out of PPP, right? That was late yesterday. They released it. So then as I was saying before we came on air, I had needed to find the section, which took me about 45 minutes. And then those 140 pages, that wasn't all of it. You had to bounce around to other sections to find everything. So finally, I got a summary section by section earlier this morning that I've been going through, updated a few of my notes in terms of what's new and different, but it's pretty impressive. It's a behemoth of a bill, and it's pretty close to a wish list of what a lot of folks wanted in this industry.
So let's set this up and we're going to go through the main points today, but a lot of the stuff is still a little gray area that the administrator has to do certain things, create forms.
That's
but
right.
At least we have the outline, and we know in the not to put a damper on this, but we know Congress had an intent that was not followed. This time Congress said, no, this is what we want you to do.
Right.
So let's do this. Let's go ahead and ask your questions. We'll try to answer them as best as you can. Let's go. We have some poll questions, and then we're going to turn it over to Chris and let him tell us what he knows. But let's set this up. Does the legislation call for existing PPP borrowers with less than 300 employees that can show a 25% decline in revenue can get a second loan up to $2? Maybe that's
$2. $2 be helpful.
Maybe that's $2 million. There we go.
Yeah,
true.
There you go. That's true.
That is true. Correct, Chris?
Yes, that is. Absolutely.
Well, and the 25% decline in revenue has to be in one of the first three quarters, comparing 19 to 20.
Lance, logistically, we just take internal financial statements. How do we verify that? Or do we verify that as well?
We haven't been given guidelines on that. I suspect that we can use internally prepared financial statements because they won't have a tax return for 20. So my guess is we're going to have to use internally prepared financials.
But we're not comparing it to tax returns of 2019. We're comparing it to internal returns as of September.
You know, one of the challenges, Bob, my phone's been on fire with borrowers asking how to calculate. There are calculators across the country where people are working to make a determination if they have that 25% drop.
What is the definition of revenues? And we're going to have to get all of it.
There's some additional information, Bob, that we're going to need before we understand. We know the basics, a 25% decline. We know that it has to be a quarter, one of the first three quarters of 20 comparing to one of the first three quarters of 19. But we don't know exactly, the definition of that revenue number. We've not been told what kind of verification is necessary. It could be as simple, Bob, as the PPP borrower is supposed to be a simplified form, Chris. PPP borrower putting a revenue number for quarter 2 of 19 and a revenue number for quarter 2 of 20.
Yep. And actually, just to clarify something, as I had this question this morning, somebody asked me if they started their business in January of this year, so still before the February 15th threshold that was there for the first initial PPP round, would they qualify for this? And actually, it's in the text of the legislation, so you can. Of course, somebody's going to ask now, well, how do you do that? I don't know exactly. I don't recall. I don't have my big stack of papers in here right now, but I was asked that question. So even if you started early this year, so long as it was before the February 15th, you actually could still qualify for this as well.
Gentlemen, your opinion on the 25% decline, is that number too high, too low, about right?
It's what I was asking for back to June or July. I mean, as recently as a couple of days ago, it was 30%. So I'm glad to see it. I think it's going to cast a broader net and cover a lot more businesses and do what it's supposed to, which is try to stabilize the economy and get us back on track so we can get past get past this terrible virus.
Yeah, Bob, I'm with Chris. I feel like it's a fair percentage. And I really honestly, in talking to some borrowers today, most are going to be able to fit in that 25% category. Most borrowers that I was talking to were comparing Q2 of 19 to Q2 of 20 and easily getting that number.
Yep.
If my number is right, Chris, $285 billion with a B is allocated for this program.
Yeah, and I think, Congress is kind of tipping their hat in terms of how they expect the funds to be used, in that's, if my math is correct, I think that's 54% of what was spent in the initial round of PPP. So they're basically saying they expect about half of the businesses that currently have a PPP loan to be able to apply for this second draw of PPP. I mean, it's not obviously exact dollars for dollars, but it's a pretty broad threshold. And again, as recently as a week or two ago, I was only thinking 25 to 30% of all the initial PPP borrowers would actually be eligible for whatever this second draw was going to be. So I think it's a sizable increase.
Chris, what about for new borrowers, someone who did not take advantage of the program, but they're clearly eligible? They've set
aside $35 billion
Okay.
in this bill, which will soon be law, and we should probably talk about that in a minute as well. But $35 billion will be there for what are now going to be called first draw PPP loans.
Okay.
In this bill that necessarily simplifies things for the first draw folks. So it might be some of the brain damage it was for all of us in the first round on those. I suspect there's going to be a lot of fraud from those. Lender beware if they're going to participate in.
I think the lenders are getting a little bit smarter. They're going to start doing some more.
A lot more background checks on things.
On one hand, Bob, there's not going to be as many jets bought with PPP funds because it's only $2 million, Bob. So
that's right.
The big flashy stories of Lamborghinis and jets probably are not going to occur this time. But I do.
I don't know which. I think you can only get a handful of used Lamborghinis, Lance, for those prices. I'm pretty sure. Yeah.
Chris, real quick, if because I have a friend of mine in this situation, and she did not get the first round. Mm-hmm. She does not have a reduction of sales, or sales are flat. So would she be eligible for this under the first draw provision?
Yes. Yeah. So long as she met a lot of the other gating thresholds that were there originally, like, she was around on February 15th.
First draw, we don't have to have that 25%. Okay.
No.
Second poll question. Eligible expenses now include software, cloud computing expenses, human resource, accounting cost, a lot of different overhead stuff. And we could take a percentage of that to calculate the loan. And that is true.
Yeah. They have broadened the categories that you can spend the money on. So I guess you can pay your accountant to help you calculate your PPP forgiveness now.
Chris, do you see?
I don't know. There's something called out on that.
There's something that doesn't sound right about that to me.
No. You could do outdoor dining. That's included, by the way, if you're a restaurateur. That'll be a new eligible expense. What were you going to say, Bob? I'm sorry.
But the cost to set up the outdoor dining?
Yeah. The cost to set up the outdoor dining, PPE and, in general, that'll be eligible. Ventilation things that you might have installed. I mean, there's a variety of things that'll count, but you still have to spend 60% on payroll. That's important.
Okay, 60% payroll. We don't know yet on what type of documentation we need on this, but we know the payroll.
Right.
Now, this one, I don't know the answer, but this is my question. New funding for 7A and 504, are they covered in Section 1112 payments for up to 6 months after disbursement?
It's kind of a trick question, isn't it?
I know it is. That's why. All right, Chris, I'll let you take a stab at it. Then let Lance think about it.
Well, this one's complicated. So this one is the way it reads, you're going to be able to get an additional 3 months of P&I payments. You'll up to $9,000 a month. Okay. If you are of a certain NAICS code, and there's about 15 of them, these are theoretically the hardest hit industries, you're likely going to get an additional 5 months on top of the 3 months, so 8 months. And then if it's a new government guaranteed loan that was made as of February 1st of this coming year, you'll be eligible for 6 months for those as well. And there's a bunch of other stuff to this as well that, again, we have summaries of the bill's text, and we have the bill text, but at the end of the day, the administrator is going to have to come out with the exact guidance to give us all the specifics. And here's the funny thing about all this. In the law, I'm sorry, I shouldn't call it law yet. It's not law yet. In the bill, SBA is actually going to contact us as the lenders to tell us who qualifies for this, which I found kind of interesting. I don't know about you, Lance, but
yeah, well, first of all, SBA has their hands full.
Yes,
to begin with, and I think that was an interesting part of the bill. Now, those industries, hospitality, restaurants, it's a good news item for them because it looks like they're going to get 8 months worth of payments starting in February.
That's right. That's right. And it's recreation, it's arts, it's entertainment, it's personal care services. I mean, it's pretty broad. They have a specific list of all the NAICS codes in the
and at a minimum, everybody gets 3, basically.
Yes, that's right. That's right. Yeah, 3
Okay,
additional.
but let's clarify one important thing. Are these forgiveness or are they deferred?
Well, these are
just the payment.
Yeah, this is just covering principal and interest payments, and it'll be up to $9,000 a month.
Okay,
What happens beyond 9,000? So if you got a pretty large 7A loan, for instance, that's beyond that, that was less clear in the bill's text. So I think we're going to wait for.
And Chris, here's a big, the dragon hidden in the closet that nobody's talked about. Are they going to be able to write off the interest on those payments as an expense?
Ooh.
I was thinking, I was going through the bill and the highlights of the bill. Of course, they fixed the part where PPP funds spent on payroll and mortgage interest and utilities, you can deduct those expenses. That was in there.
Yeah.
But nobody has addressed these Section 1112 payments and whether or not that interest is deductible.
I don't know.
We will
see. Yes.
Yeah, we will table that for another discussion.
Yep.
Finally, last poll question. The bill covers blanket forgiveness, 1-page borrower certification for loans under 50 grand. And I know it's a trick question, Chris.
I don't know why you do this, Bob. No.
He likes to trick people, I think.
The good news, everyone got it right. It's true. But it's also false in the fact that it is for 150. Are you shocked that we got the 150 level, Chris and Lance?
I'm not. I mean, my God, we've talked about it for 6 months at least, haven't we? I mean,
I don't know how you feel, Chris. I'm not shocked. I'm thankful. The one thing in the bill that it appears, and Chris, correct me if I'm wrong, but they're going to complete the forgiveness app and the borrower is going to be responsible for keeping the documentation, not the participant bank.
Yes, which, as you guys know, I've been saying that for about 6 months as well. Let's
think
use the standard of when you file a return to the IRS. You got to be responsible. If you submitted that information, you should retain your supporting documentation, and that's that appears to be what they've done here. So I think it's a big benefit for a lot of folks.
Let's make sure we've got all the highlights. We've talked about all of this. Chris, the other two things that aren't on this, maybe they're on the next slide. Let's talk about tax forgiveness and the idle advances.
Yeah, so they took the idle advance off the top of forgiveness for PPP, which is nice. The 10,000 might irritate some folks that have already gotten forgiveness at this point, but I don't know what you do. And then the Lance already talked about they've now put it again in writing what they want, their intention, Congress's intention of the forgiveness funds is not to create an additional taxable event for the small business owner. So if you spent the money on payroll, you in essence you still get to deduct those expenses, which I've been saying that for months. I think that was the intention.
That was the intention. That's what they said. Yeah.
Yeah. And I don't think it matters. I think I gave you guys that example one time about, you get an equity injection from your neighbor. It's not a taxable event. You get an equity injection from Uncle Sam in the form of a forgiven PPP loan. That shouldn't be a taxable event. So I think cooler heads prevailed here, and unfortunately IRS doesn't get to reach out and get a nice tax on all these PPP small business borrowers.
Very good. Let's see. There's a ton. I mean, Chris, you and I are in the same boat. When we think we have a handle on it, we're getting more and more information. The problem is we don't know. Some of this is speculation still because we don't have the forms from SBA.
Right.
Our poor friends of SBA are going to be losing their
the holiday, not going to be merry.
They're not going to be flying. Oh, wait a minute. We can't fly anyway. Well, I guess a lot of people are. But
yeah. I mean, what I think what people need to make sure they understand is because they did a 7-day continuing resolution.
Yeah. Please go through. Yeah, please go through.
I mean, because it sounds like Lance has been getting calls and emails like I have and my team has all morning. Well, actually, it's been all week and last week. But now that it's passed the Senate and the House as of last night, now because they also did the 7-day continuing resolution, it can't procedurally go to President Trump until I think either Monday or Tuesday of next week. So he's not going to sign it until Monday or Tuesday. I mean, all indications are he's going to sign it.
Of course.
Yeah, of course. And then the administrator has to establish the regulations within 10 days of the enactment of this new law that's forthcoming, which then puts you, if you just look at the calendar, that puts you to basically Friday the 8th of January is probably the earliest date that at least that PPP could relaunch. And that assumes, as you just said, Bob, the forms are drafted, they're released to the lending community. There's a lot of work to do here. It was funny when I was going through the bill yesterday, I kept underlining dates, they'll do this within 7 days, they'll do this within 10 days, this in 14 days, this in 17 days, this in 21 days, 24 days, 30. I finally just kind of threw my hands up and said, this is just, somebody's going to have a Gantt chart to keep track of all this stuff. It's a lot.
As I said, our friends at SBA, they're not complete idiots.
No, of course not.
I suspect they've been working on these forms for a while. They know what's been happening. So,
well, and it's like the forgiveness form, Bob. They don't have to they can take the 3508S and make it 3508 new or whatever they want to call it and change a couple of items and they're good. So
yeah, and they like to add just an extra digit. So we may have a 2485 and a 2486 as the second draw. I don't know. It wouldn't shock me if they do stuff like that.
How about this? How about the three of us volunteer? We'll create the form. It'll be one sentence. We certify.
I use the money
compliance. That's it. Boom. How's that? We solved the problem.
I'll edit what you guys come up with. I'm a little busy at the moment.
That's it. I certify my compliance. Boom.
And I think Chris is right. I mean, the 8th is the earliest. Probably, I don't know if the 15th is a work day, but
it is.
Somewhere in the early to middle part of January will be the relaunch, most likely.
And remember, we have Martin Luther King holidays in there as well. Well, very good. Lance, real quick. By the way, thank you for all your questions. I'm going to hold them all over for tomorrow. I mean, thank you for that. Lance, you're going to do a webinar in about a half an hour on the 5053, and then we're going to devise a webinar next week. We'll have a lot more information on getting into the details and how to process all this stuff. And we're going to do that on Tuesday, correct?
Yes. Yes, Bob. We're going to do our best. We're going to do a webinar here in a little bit on the new 5053, try to help you understand the review process, how you're looked at by SBA as a participant lender, and just try to give some clarity to what is a very short document. You don't hear that very often when you talk about an SOP, but compared to the new bill, it's a very brief document.
Wow.
Anyway, gentlemen, have a Merry
lot
Christmas.
of books are very small compared to the new bill.
Have a Merry Christmas. Chris, I've really enjoyed
Likewise.
your participation the past 6 months. Thank you for being a regular. And
Thank you for
Lance,
having
as
me.
always, I appreciate your feedback and your interest in this. And with that, thank you for joining us today for Coleman Report Live and for supporting America's Main Street, one entrepreneur at a time.
Have a great day.